Have you ever stopped to think about what the day-to-day costs of running your business are actually telling you? We're going to dive into something called total operating expenses, or OPEX. And in the next few minutes, I promise we're going to demystify it. We'll break down exactly what it is, how to figure it out, and why this single number is so important for your company's financial health.
Seriously, just think about that for a second. All the money you spend every day that isn't directly for, making your product or delivering your service, what's the story there? It's not just a boring list of bills you have to pay. Nope. It's like a live report card on just how efficiently your business is running.
So, to really understand that story, we've got to get clear on our main character here: operating expenses.
Okay, simply put, operating expenses, or OPEX for short, are basically all the costs that keep the lights on and the doors open. These are the bills you have to pay whether you sell one thing or 1,000 things. They're the fundamental costs of just being in business. So what does this look like in the real world? Well, we're talking about the big stuff like rent for your office or store, and of course your utilities, electricity, water, internet, all that jazz. It's also your marketing budget, your admin costs like office supplies and insurance, and the salaries for your non-production folks, everyone who keeps the engine running behind the scenes. And then there's one that people often forget: the depreciation on your assets. All right, so how do we actually add all this stuff up? Don't worry, you don't need to be a math genius for this part. The formula is, believe it or not, incredibly simple. Finding your total operating expenses is really as easy as it looks. You just add up all those day-to-day costs over a specific time frame, say a month, or maybe a quarter, or even the whole year. That is literally it. And here's what that formula looks like using the exact things we just talked about. You just take your rent, plus your utilities, plus your marketing, and so on right down the line. See? No complicated algebra, just good old-fashioned addition. Theory is one thing, but let's actually see how this plays out. We're going to walk through a quick, real-world example together, right now. Okay, let's pretend this table shows your company's expenses for just 1 month. You've got your rent at $2,000, utilities are $500, marketing is $1,200, admin costs are at $1,000, and you've got $300 in depreciation. So let's add them up. We've got $2,000 for rent, plus $500 for utilities, $1,200 for marketing, $1,000 for admin, and that last $300 for depreciation. What does that give us? $5,000. Bam. That's it. Your total operating expenses for the month are $5,000. Simple, clean, and as you're about to see, super insightful.
Okay, you have the number. Now what? This is where it gets interesting. This is where OPEX goes from being just a number on a spreadsheet to a powerful strategic tool. It's a window into the actual health of your business.
Think about it this way. On the left, if your operating costs are climbing faster than your revenue is coming in, well, that's a flashing red light. It means your efficiency is probably dropping and it's time to figure out why. But on the right, if you're keeping those expenses under control while your revenue grows, that is a fantastic sign of strong, efficient management and a really healthy bottom line. This quote really just nails it. Managing your OPEX isn't about being cheap. It's about being smart and efficient. And that efficiency is what gives you a stronger foundation and the flexibility you need for real growth.
All right, let's do a super quick recap of the essential steps so you can put this to work as soon as we're done here.
It really just boils down to a simple 3-step process. First, you identify and list all your regular day-to-day operating costs. Second, you just add them all up for whatever period you're looking at. And third, and this is a really common mistake, so listen up, make sure you're leaving out the costs directly tied to producing your goods and also your taxes. Those belong in totally different buckets. And here it is one last time, just to really hammer it home, the core formula. This is your key takeaway. It's just the simple sum of all the costs that keep your business up and running. So I'll just leave you with this question for your own business. Now that you know how to do this, now that you have the tools, what story is your OPEX going to tell you about your efficiency and your path forward to growth? Something to think about. Thanks for tuning in.